YouTube, what's going on? My name is Sean Lucas, and today I'm going to be showing you guys what I do to research a company before I decide to invest into it. I know there are a lot of beginners out there that are looking to get a better understanding of what to do and how to research companies before they buy in. So today I'm going to be showing you guys how I do that with the company GAP, or ticker symbol GPS. Alright, so it's no secret that I haven't shown my portfolio in any of my previous videos, which some of you guys might think it's weird since I'm a finance related channel. But there's a reason for that. You see, I'm a big advocate of people learning things out on their own. I think way too many people get by in life just by mimicking someone else's actions. They never try to learn, they never try to challenge themselves, so they never actually get better. Because they can just fall back on little Bobby down the street that is going to show them exactly what to do step by step. Which, don't get me wrong, is fine for some people. But the point of my channel is to help people learn what they may not know to help better prepare themselves for the ups and downs of the market. And along the way, it will keep me learning too. So without further ado, let's jump into the point of the video where I break down what I do before making long-term investments using the company GAP as an example. Alright, so just a quick little tip for all you beginners out there, and before we get into the bulk of the video. I found out in my experience that I really needed to invest into companies that I truly liked. I found if I invest into a company that I actually enjoyed learning which new products they're coming out with or new innovations they're coming up with, that I felt much more comfortable with my money being invested with them than something rather than maybe JCPenney's or Hertz, you know. And maybe if you like, or I guess liked Hertz, then maybe you just look away for a little bit. And as long as you follow some of the tips in this video, you'll feel a lot more comfortable and have a better time in the stock market having your money invested in some of the, some of the companies that you enjoy, like either Tesla or Disney or Amazon, Google, compared to Hertz or JCPenney's. You picking up what I'm laying down? So getting into the bulk of the video here, let's start with the very first thing I do when researching a company. Well, to be completely honest, I Google them. I look up relevant news articles on each company, and for GAP, right off the bat, you can see that they've been around for 50 years. What's funny is that I used to have GAP in my portfolio, but not recently. I took it out of my portfolio about a year ago, just on the sheer fact that I couldn't see them sticking around for another 50 years. Because, I mean, come on, when's the last time you or someone you know has shopped at the GAP? Right off the bat, other things that you can find from, just Googling is that they have a market cap of $4.5 billion, and something that we, obviously know is that they are in the retail sector, or wholesale sector. But when you search them now, you see news articles showing that the Yeezy man himself, Mr. KAYNE, I'm gonna let you finish, West, is planning to sell his own Yeezy line through GAP exclusively, which I would say is pretty huge news for GAP. Other than just grooming over a little bit of background on the company, I'd say it's just about time to look into the financials. Alright, so now the second thing I do when researching a company is I look at their volume profile on a chart. Now if you don't know what a volume profile is, don't worry, I'll try to explain it. As you can see from my TOS here, that there are some blue bars on the left side of the chart. Now normally these bars on the horizontal axis of the chart, and they would represent the volume for that given day or whatever time length you choose for your chart. And these blue bars on the left side, or the vertical axis, also represent volume. But what's cool about this, it shows you where people have bought in the past and where they're buying in now. But it's also related to the price. Now, what I would normally look out for is big gap ups. If the stock just gapped up, then you should expect the gap to be filled relatively quickly. So if you look at GPS here, you can see where the stock used to trade at, right around $15 to $19, right around that price range. But right now it's at $12.51. Well, it's at $12.67 right now. And the lowest that it traded at during the pandemic happening is $5.26. Now looking at the volume bars on the left, when it was trading at $15 to $19, there's a significant amount of bars, or the volume, that was at that price range, as you can see here. And with it now trading around $7 to $12 since the pandemic, you can see the amount of volume bars are growing around that price range down here, and obviously here. Those are what my old mentors used to call a volume shelf. Now in between those two shelves, this significant one and this significant one, is something that we would call a volume pocket, meaning that if the stock broke the support here, or broke the resistance here, then the stock would move pretty fast, because not a lot of people have bought in this area, the volume pocket. The price change, whether it be up or down, wouldn't slow down until it meets the next price volume shelf, here or here. Obviously, you can see that it happened here. So to reel it back in here for GPS, I like where it's at currently because it's found a new volume shelf. because there's a lot of people who've bought in above, so they'll try to keep the stock moving to get it back where it originally was at. Now this is a little bit more on the technical analysis side, and I like to do a mixture of both. So now let's move into a little bit more fundamental analysis. Alright, so for the third thing I like to do, and I think it's really important, especially for long-term investments, is to figure out how that business works. I like to learn when that business thrives. Are their sales surging through the summer? Do people stay away from them during the winter? Does the company come out with new products yearly, quarterly, or monthly? And who are their closest competitors? You know, so things like that. So for Gap, they're a retail company that sells clothing. And fashion isn't something that's just a 4-season thing anymore. Fashion has 12 or more seasons, one for every month. That's how fast things are changing in the fashion world. Who are their closest competitors? Well, you got H&M, you got Macy's, you got Tilly's, you got PacSun. I don't know if Tilly's is actually nationwide. We have a Tilly's by my house, so that's why I said that. And from what this graph shows is that they do the best during the first quarter of every year. So to end this point, you should try to learn how that business thrives, learn how it works, learn how it operates, learn how they make their money. And if you do that and you learn how they do it and you like the way they make their money, then you will more likely feel better having your money invested with them. And for the fourth thing I like to do is I like to learn what their dividend yield is. After all, this is a long-term investment, so I'm looking to get some dividends out of it. And if you're not familiar what a dividend yield is, don't worry, I got you. Quote, the dividend yield or dividend price ratio of a share is a dividend per share divided by the price per share. It's also a company's total annual dividend payments divided by its market capitalization, assuming that the number of shares is consistent. It is often expressed as a percentage, end quote, and that comes from Wikipedia. Or, quote, the dividend yield expressed as a percentage is a financial ratio that shows how much a company pays out in dividends each year relative to its stock price. The dividend payout ratio is the ratio of the total amount of dividends paid out to its shareholders relative to the net income of the company, end quote, and that comes from Investopedia. Now, for myself, I like to invest in companies that have a 10% or lower dividend yield, or if I want to get really picky, 7% or lower. Now, as you can see from this chart here, or this picture here, that GPS or Gap has a dividend yield of 7.75% according to Google. So not too bad, but it's not under 7%, but let's keep taking a deep dive, because you should never invest or not invest into a company because of one factor, ours being the dividend yield. Now, moving into the fifth thing I like to do before investing into a company is looking at their revenue. Now, I like to do this for a couple reasons. One being that I like to learn if they're making more money each year or the same amount or not at all. And I like to compare that to how much they're spending. So you can see here that Gap or GPS is bringing in right around the same revenue for the past 15 years. In 2020, they're projected to make about $16,383 in millions, where the lowest in the past 15-year period was in 2010, bringing in only $14,197 in millions, and the highest year was last year in 2019, bringing in $16,580 in millions. So as you can see, they're staying pretty steady. And one last basic thing I like to look at is their net income. Has it been increasing in recent years? And you can tell that their net income has been increasing in the previous years. But this year you can see that there's a huge decrease. Something that you got to keep in mind during a recession or in our case a pandemic and possible recession is that the numbers on a balance sheet or income statement or a cash flow statement is going to be heavily affected by the number of people that are going out and buying things. Now keep in mind that some of these numbers that you're seeing on those statements could be very well situational instead of suggesting that it's a dying business. Now, while editing this video, I realized that I forgot to answer the question of the video. Do I think Gap is a buy? And to answer that question, I honestly don't think Gap is a buy for me. Even with KAYNE exclusively selling his line through Gap, I don't think it would be enough for me to buy back into this company. I sold my shares in this company for a reason. And that reason was I didn't think, and I still don't think, that this company will be around for 50 plus years. But that is just my opinion, and it could be very well wrong, so just take it with a grain of salt. Now, there are tons of ways you can research a company and a bunch of other things that you can do. This has just been 5 ways that you can do it, and I was just suggesting it to you guys as something that you can do to add to your arsenal. Obviously, this isn't everything I do when researching companies, but it is a good start. Nonetheless, this is going to be it from you guys on this one. I hope you guys enjoyed it. I hope you learned something new. Other than that, remember to like, comment, and subscribe. And I will see you guys on the next one. Peace.
Unique New York. Unique New York. Unique New York. You know you need unique New York. Unique New York. New York. Chicky Dark. Scooby-Doo.